The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN 877-927-6648. We've got quite a bit to cover today because a lot of things are happening. But I wanted to start out with some cycle things that we've been looking at for the past 5 years. I posted in the Tiger TV the long-term chart of the weekly cash S&P, and it highlights the August 15th date of 2007. And, of course, we're right here again. This date was very, very important, and I remember at that time I was not doing a radio show for Tom, but I was, doing a segment spots for him, and I was in Las Vegas at that time. And at that day, on August the 15th, that was the day, only the second time that Skype had ever gone out, which was, a big thing. And at that point, the Dow was down 350 points that day, and the futures for the Russell small caps were actually up on the day, and the NASDAQ was virtually down just very little. The S&P was down a great deal, and the Dow was down 300 and some points, but the NASDAQ and the small cap were up very, very small, or up a little bit, on a down day. So that was a big bottom day. And once we took out that low, that told me that, we were going to be in a really bear market. And then, of course, in 2008, we had the chance in March when it made a 61% retracement and started down. So we're at the August 15th date right now. This year we have three major planets that are lined up. We have Mars in opposition Saturn, which is a longer term cycle, and then we have Venus opposition Pluto, a shorter term, and Venus squared Uranus, which is one of the major Fibonacci cycles. The reason why the Venus squared Uranus is important is because it takes Venus X number of days, actually 225 days, to make a complete cycle around Uranus. If you take 225 and divide it by 365, it comes out to 0.618. Well, this is characteristic of almost all the cycles in the Venus sequence because of 618 being so important. And if you believe in lunar cycles, because the moon is nothing more than a satellite, and it does affect our tides, and it certainly must affect our markets, we've seen that enough, then you must believe that the two inner planets, which are Mercury, which is 88 days, and Venus, which is 225 days, affect it a great deal. So these are why I try to specialize the cycles at those particular times. That means this is a Bradley date today, August the 15th. So we'll see. Now we have another, I can't remember which aspect is tomorrow, but we do have the new moon, coming in on Friday. So we have a one-day orb on that between Thursday and Friday. So we'll see if that has any effect on it at all. But this is what we're looking at with these cycles. All of the things that we talked about on Monday's show about the divergence between the NASDAQ and the Dow Jones Transportation, the utilities, the small caps, Russell, all that stuff is still in vogue. I mean, nothing has changed. The Dow Jones has still had trouble at 13,200. The S&P still has trouble around that 1,400 level, even though it's a little bit above it. And, of course, we do have a situation now in the bonds where they're finally starting to break down. So we want to watch that very, very closely. Now, I have to talk a little bit about one particular commodity right now because we have been talking about it for a long time, and because we're very, very close to the price being met, I wanted to mention it on today's show, and we'll cover it more, of course, on tomorrow's show because we'll be getting closer to the target. But this is the natural gas contract. We started talking about this a long, long time ago, and then in early August, we were expecting an equal correction from what we had between May and June, and lo and behold, we are very, very close to that right now. We're making a beautiful AB equals CD pattern coming down here to around 2.60 per cubic feet, and that should be made in the next day or two. Hopefully it'll be made on tomorrow's show, and we'll be able to point that out to everyone. But it's a beautiful AB equals CD pattern, and it is doing exactly what it's supposed to be doing. And so all we need to do now is to wait till the price is hit, and if it does move in the direction that we hope. Now, if you're trading in the ETFs for the natural gas, I think that ETF for natural gas, it's the natural gas shippers, I believe. I'm not sure, but it has a high correlation between the natural gas, and it is also making a beautiful Gartley pattern down around that 18 level, and right now we're at 1885, so we're very, very close, to that point. We'll cover more of this tomorrow, of course, but we might get it today, and you want to be prepared. If in fact you get it today, you want to be able to get on it. I don't think you have to risk very much. It's a perfect pattern. It's done exactly what we wanted it to do, so you can't expect it to do any more than we've already done, and that's the main thing that we are looking at now. The next one we really need to talk, and that is the Treasury bonds, because we have certainly broken below any support now. Once we went below that 147 level that we talked about for quite a while now, we're about $1,000 below that, and we're down quite a bit in the last week or so. We've gone from 151 to 146, which is a great deal. Now, if you're not already in this, one of the things you want to be watching for, and then of course what I'll be watching for, is if we do get an AB equals CD correction in this, because this looks like we have had a major top, and the reason for that is we made higher highs by just a very little bit in the Treasury bonds, and we made a perfect butterfly in the notes when they were making new highs, and now we've broken down through support, and I'm sure the people that are watching the sequence of moving averages that can be very, very helpful. They've started to turn down, so that'll bring in a little bit more bearishness. But by the same token, we've been down so many days in a row, we could still be looking at a rally back, and that's what you want to watch for is the rally back, and you will get some rallies in this because it's a huge market, and there's always news coming out to help you give you a chance to get in these things when you're ready to do it. But at least, so far it's starting to move down to the, below that 1.4. Just a minute, I hear something. Oh, I think that's that big boat that Tom has that I was supposed to ride in. I think it's leaving the port now. I never should have done that because that's I was tempted not to do it, but somebody forced me to do it. Anyway, whether it works or not, that's probably the thing that'll get the bonds to go to 160 was that little slide comment. But anyway, he made me sweat it when I was up in that 154 level, so we'll see what happens. It wasn't very good impersonation of a big boat anyway, but it's hard to get a impersonation of a boat as big as Tom's anyway, so it's kind of tough. Okay, now we've already talked about the the bonds. We also want to take a look at what's happening with the notes because they also are breaking down below that. We had the huge ABCD pattern up there. We had the butterfly pattern that occurred, and now we're breaking down dramatically below the lows. Well, not really dramatically here. We're just in the notes. We're only taking out the June lows by a little bit. So this could be a spot where they do get a bounce from. And we will know more about that, by the time next week rolls around. But at least, we're having a pretty good correction here. And the pattern for at least a major top is certainly in. And if it does, we'll have to, you'll get plenty of chances to get in this on the way back up. You'll get, several AB equals CD patterns because none of these go straight down. You can look at those and you'll see that, they all have their little idiosyncrasies to give you a chance, to get in to these particular markets. But those are the ones that I believe are really important today. We've been following the stock market one for quite a bit, and whether this is going to be the week, I don't know. But this is a Bradley date. The date that I was looking at for the Bradley model, the 3rd, and with a maximum to the 10th, that's not working, folks. So unless it inverts today, which is the 15th, and the market's gone nowhere, so I'm still basically very committed to the short side here. But that could change on any explosive move above 13,200. In the Dow, and you got to get a little bit of a volume here, folks, because we're getting no volume in these markets at all. There's just virtually nothing happening, and you really need volume, to get the market, working in your favor. So that's all I can say about the market, because it's done. It's gone a lot higher than I should have in the Dow and also the S&P. But as far as the others, the New York Stock Exchange Index, it hasn't violated anything, nor has the NASDAQ. And, of course, the Russell, the transportations, and the Dow Jones Utilities look horrible. They're in bear markets. I mean, they're making lower tops, all the time. So we have to assume, giving those situations, this is not a breakout to the upside in the stock market by any stretch of the imagination. Now, the market that has been, running most of this stuff, of course, have been the U.S. dollar, and we've been down now 2 weeks at the 786 level, and at this 82 level, we've attempted to hit it about 3 times now, and this means that this dollar, if it can just hold this level and start to move higher, it's got a chance to really get out of here. But it's at a real critical level. Now, I always try to listen to Basil's show, because it's really difficult following him, because he has such, really good information, and the numbers that we look at are, kind of close, even though we arrive at them from different ways. And what his comment was about it being very, very tricky, and comparing it to the March 2009, I couldn't agree with that anymore. I mean, that's a spot-on call. It's very, very difficult here. In March 2009, you had to have Band-Aids on your fingers to buy anything, because everything was so bearish. And now there's just nothing happening. I mean, in fact, in many of all the years that I've been trading, I can never remember seeing the volume in these things just dry up so much. Now, I don't know if that's a figment of what people have done to Wall Street as far as not trusting them, or what it is, but there's no money coming in, and there's nothing really happening. It's going up, and when it goes up, you have to respect it, of course, if you're short or long. But the reasons behind it are very difficult to find, because there's no volume coming in to really make the market move, and that's equivalent in all the stock indices and stock markets all across the global basis. I mean, they're all doing the same thing. None of them have violated any of the 786 numbers, and of course now we have a big Gartley sell signal coming into the Hong Kong market, the Hang Seng market. So that's another one that's going to be rather interesting to watch. I don't trade it, but I do watch it, because we go to Hong Kong, quite often. Okay, we got to take a break. When we get back, we want to go into the gold market and the silver market and discuss them a little bit. And if you have any questions, 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to talk a little bit about gold before we get to the next break. The 30-minute gold chart I posted into the Tiger TV, and you can see we've been making higher bottoms all along. The problem arises in the overall gold and silver index that we talked about last week, because as of August the 10th, we were making, that was last Friday, we were making a little Gartley sell pattern at the perfect 61% retracement up there at that 160 level, and now we've backed off for 4 days. And my assumption is we're going to get down just a little bit lower, and that would give us a chance, to buy this again, because it's a really strong pattern on the weekly, and it's also a really strong pattern on the daily. So this is one that we, really have to pay attention to, because it's got a chance, to really be a good one if it starts to move a little bit higher. But we're in the middle of a little Gartley sell signal here. That should not last more than a few days. My guess would be into Friday or Monday, and then we will take a look at the spot to look at it. Don't everybody remember that August the 19th is President Clinton's birthday, so make sure you send him a nice card or a box of chocolates or something. So it's important. The only reason I know that, it happens to be the birth date of my daughter Jill, so that's the only reason that I know that. I'm not a big fan of the Clintons. Well, not too many politicians at all. Oh, I better get off my soapbox, otherwise I won't get anything done. Okay, the silver market is still not acting nearly as well as the gold market. And I frankly, you think you're going to have to get the gold market to move, a bit higher in order to pull gold up a little bit. So, that's the main reason of, what we're looking at. Now, I would like to move over to the euro versus the U.S. dollar, because we just had a very nice retracement that we've been waiting for. The euro came down to the 122.65 level, which was a 786 retracement of these last moves. And remember, we still have a chance for the euro to get to that 125, 126 level. That's where the larger AB equals CD is. And so this is a place where, we should get a little bit of a rally somewhere between 50 and 100 points. We've already rallied about 20, which isn't very much. But if you're in this particular trade, if it makes a new low on the day below 122, 50, then you would want to stand aside and be as close to about a break-even trade as you would possibly get. I did have a question from someone in the Tiger Den, and that was about these cycles that I talked about when I started the show. I basically talked about the big cycle that occurred on August 15th, 2007. That cycle has not been seen very many times in the history of our in the history of our country. Over the several hundred years that I've studied it, it only hit 4 times, and each time it was a major bottom. And we did bottom at that point. We made new highs, and then after we broke that, that's the first time that we broke a cycle low, and we've never gone above that old high. That was in 2007, which tells me that this is something very, very serious, and we still have more to go to the downside. If we do make new highs, then all this cycle stuff that I looked at is wrong for the time being, and I'd certainly have to wait and see what I do with something do a little bit different. Someone asked me, what do you do when the Gartley or when the Bradley model is off as far as it is? And the first thing I do is I look at the ratios. The second thing is I look at the patterns, and then I look at the Astro and the Bradley stuff as the third thing, because that's the most elusive. I mean, I've been doing this for many, many years, and the time is the most elusive of anything we do. And if you knew the exact time, the patterns and the ratios and everything else wouldn't make any difference, because time is the ultimate, determining factor of when the market's going to go. When the time is up, the time is up. It doesn't make any difference what the news is. We just saw this last week, in the wheat market and the corn market, when we had these huge numbers coming out of the government saying, that we're out of wheat, we're out of corn, we're out of beans, and yet that was the top day, at least temporarily. As a matter of fact, the wheat thing that we looked at, when the wheat made that big AB equals CD move last week, we were saying, that was a time to go short wheat. And then what has happened is the wheat turned around and has made a very nice bullish pattern, on the downside, and you want to be long wheat. And I'll post this into the Tiger TV right after we have this break to pay a few bills. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into the Tiger TV the pattern that we were talking about before we went on the break, which was the wheat pattern. Last the Thursday when the big grain report came out, we were making a bearish Gartley in the wheat up at the AB equals CD, and what we've done now is we've completed the ABCD of that pattern to the downside, and it's right at the perfect D level. And at this point, you want to be looking to go long wheat. And so we'll see how this one works. And, you don't have to risk very much from here. You're only risking about, 10 cents or so. in the wheat. So if it does happen, we'll look at it. Now, it doesn't make any difference whether we're looking at wheat or Google or Apple. All these charts pretty much look the same. The good part about the futures and the Forex is that they trade, very active, a lot more actively than some of the stocks, and they trade on a 24-hour basis, and so you get some nice patterns that you might not see in the stock market. So the futures are fun to trade, and by far the Forex is the easiest thing to trade because it trades 24/7, 5.5 days a week, so it makes it pretty good. So this is the area where we'd be looking, to cover the short wheat and actually go long wheat because the pattern is complete. We don't know whether the pattern is, right or wrong. But this particular pattern is really important because we're having an AB = CD correction in a bull market. And Gartley said, you want to buy those because those look like the best things you can do because you're trading with a longer-term trend. The news is certainly bullish. Everybody knows there's a drought in the Midwest. Anybody that's even driven through there or watched TV can realize that we're in the worst drought that we've had since 1974. So it's been a pretty tough year for crops, and we will have a bad crop, but the prices will eventually make it so that we ration out the supply and demand, and we'll be able to understand, where we are. Now, one of the people in the Tiger Den asked a question about the Dow Jones Transportations and, why it is lagging so badly, to the rest of the market. And, the fact that it's up a little bit today is actually a good sign, but we've been in this pennant that has been here for quite a while now, since April, and it has still had the lower highs, and we've had higher bottoms. So it's in a real tight pennant here. And if we can get the transportation to break out, maybe that would be the thing that would pull the rest of the stock market higher. But those are very few stocks in that group, and it takes a lot to move the Dow Jones stocks. It doesn't take a lot to move the Dow Jones, transportation stock. The same thing is true in the utilities. We're not getting much help there, and so it's another factor that makes us, wonder, because we've completed some major topping patterns in the utilities. We talked about this on Monday, and the utilities have been very, very quiet. And frankly, people ask me, where I think the market is going. I think it's going down, but I rely a lot on what the Bradley model is telling me. And the Bradley model, well, if you go look at where the prices were in the Friday of August 3rd and where they are now, they're up slightly in the Dow Jones, and they're up slightly in the S&P, and slightly in the Nasdaq, and down in the rest of the indices. So. It's a coin toss, and that's why I think Basil, hit the nail on the head when he said it's really tricky in here. And, the cycles are saying it's ready to pull down, but, we'll wait and see. Now, bottoms sometimes are easier to pick than tops because, fear is a greater emotion than greed, and people have a tendency, to panic at these bottoms, and you'll get, greater extensions of price, and that's what we had in 2009. Whereas complacency or greed is it's much more harder to gauge because the fear is a greater emotion because it brings out physical characteristics, like sweating and dilated pupils and white knuckles and things like that, and it's just easier to see. So this is that's my opinion. Now, someone else asked a question of, do I think these markets are manipulated? Folks, I've been doing this for over 50 years, and if I thought they were manipulated, I'd go do something else. I've got a couple of different degrees that I could fall back on. Well, not at my age, I can't. I'm pretty much trapped into doing this, and this is what I like to do. But if I ever thought these things were manipulated, I would quit. And I think they could be manipulated for a short period of time. I think the Fed can do it for a short period of time. There's people that can manipulate it for short periods of time, but for a long period of time, I do not believe they are manipulated. These markets are they're too big, and those that have always in the past tried to manipulate them have come down and landed very, very hard and paid a very, very bad price for it. So I frankly don't believe that they're manipulated. And the other reason I don't believe they're manipulated is they follow these patterns and numbers too well. I mean, if they didn't follow these patterns and numbers as well as they did, they would be manipulated. But why do they go to 1.618 in turns? Who does that? I don't know. And that's the main thing. Another question that was brought out is Hong Kong real estate. It's holding its own, but it hasn't had any big moves up in the past few months, from what I understand. But it's still well over $10,000 a square foot in the area. And that's all I know. I don't follow too much, so that's all I can say about the Hong Kong real estate. I love Hong Kong as a city. It's one of the best cosmopolitan cities in the world, as is London and New York and San Francisco and stuff. So these are really fun things to do. I have an interesting story tomorrow that I would like to share with everyone, but I'm going to save that for tomorrow. But one of the beauties of being in this business all these years, I've got to travel all over the world, and I mean, I've hit every continent. And I'll tell you, it's been I haven't hit Antarctica. There's not many people down there trading, but the main places I've been to, and believe me, we live in a great place, folks. We got a lot of problems, just like the rest of the world. But one of the great things of traveling is when you get off the airplane and you landed in the United States, and it says you are entering the United States of America. Welcome. I tell you, I get goosebumps every time I see that, and I don't care where I've been. And we do have a great country, and hopefully we'll get some of these problems straightened out. And frankly, I don't know whether it makes any difference who's in the White House or not, or where the Congress is. You're going to have someone that comes up and has the courage of their conviction to say, look, we've got to change some of these things and, get behind it, and, we will get them done. But we've been spending money, way too fast, and, we've got to pay the price. The question is we'll get back to bonds, since we're talking about this. If bonds start to go up, if bonds start to drop and notes start to drop, the increase in what's going to happen to the debt is going to be humongous, because they've been paying nothing for interest, 2.75 or 2.8 for 30 years. What if it goes back to the average that we've had, which has been 5 or 6%? It doubles in price. You're going to be talking about some, real serious problems that, and this is where we're going to have this fiscal cliff that people talk about. So, keep an eye on that bond market, because, there's a chance that the big cycle that we've looked at, and I'll put that in there again one more time, because that's the long-term, butterfly that goes back many, many years, goes back to 1980. And you'll be able to, see that this was the pattern that we were looking at. I believe the high in the futures was that 154 level, and we were looking. That was the area we were looking at, up in that at 150 to 154 level, and that goes back a long time. So the main thing now is to watch the rally back. We had that first 61% retracement back at 152, if you'll remember, just a few weeks ago, when the market rallied back quickly to 152, which was the 61% retracement, and it fell dramatically straight down for since to where we are right now. The question is are we going to hold this level or not? And I believe that we're oversold in bonds and under any stretch of the imagination. So we do want to keep an eye on what happens, at that point, to see if we are going to, be on the right side of the short side once we do get the rally at that particular point. Okay. Now, as far as someone asked another question, they drop these messages into the Dan on inflation, on what I think is happening to the inflation, and it's basically you need to watch what's happening to the crude oil market and what's happening to the the gold market, of course, because that's the ultimate currency is gold, and so far the crude oil has held pretty much where we thought we were going to be. We're very, very close to our ABCD butterfly pattern in the Gartley pattern in gasoline futures. We're only a nickel away, and so we're very, very close to a potential sell signal in this. We have an AB equals CD at that level, and we had the bullish butterfly down there at $2.55 a gallon. And now we're more than 20% higher up at the 306 a gallon. We're looking around 311 a gallon gasoline. And so, if that hits and then it starts to roll down, then there's a possibility that, we could be looking at, a deflation scenario. But frankly, this pattern is held up relatively well. It, it doesn't make any difference what the rest of the markets are doing. The gas market is moving good. Now, this is one of the reasons why, the gasoline has a very strong seasonal to go up during July and August, because people travel for their vacations. And so that's one of the reasons why gas goes up during that time. But the pattern is completing very, very close to, the area where the Gartley finishes, and that's why we need to, watch it each day, because we're getting very close. We're having the same thing happening in crude oil, because the crude oil market, I'll go into these in detail again tomorrow, but they're important to what's happening in the stock market, because, if these prices go higher, it's going to take income out of the market, and it's going to make it more difficult for people to keep their consumption levels up. But we have a Gartley pattern that will be forming in the crude oil at it's within about $2 a barrel from where it is right now. And as any of you that have ever traded crude oil, that can only be about 5 minutes. So we're very, very close, to completing that Gartley pattern in the crude oil at that point. So that's the view on the inflation that I have. As far as the grains, we've already talked about, what happened here. With the drought, and we'll go into that more tomorrow, because we have more information on the crop size and what we think is going to happen. We are in the last days of, and we did get some rain in soybeans, so that helped dampen the price in soybeans, because soybeans, the critical part is the third week in the second to third week in August, where we are right now. So they did get some rain, and there'll be the bean crop will be hurt, but it won't be hurt nearly as bad as what's happened in the wheat and the corn. So we'll do more of that tomorrow. I'll also be covering tomorrow at length. I'm going to be covering the wheat market, and also two markets that I don't cover very often will be the peanut market. And then also I'll be covering banana futures, so I'll be doing all of those. And the first person that sends me an email to tell me why I'm covering those, they will receive a nice little prize. I will give them one of my rare books. Okay, now the last thing my goodness, time goes so fast when you're having fun. The question that someone brought up was the S&P index itself, and that what I'm looking at is the cash index, and we are up at this 1.27 level that we've been at for quite some time. We've finished every pattern has been complete up here at this 141, which is equivalent to 1402 in the futures, and that's the main thing that that's important at this spot. We've really gone nowhere. Since that August 3rd level. I think we're up less than 1% in the overall S&P and in the Dow. So you'll see that, and we'll see what happens if we can get any resistance at this level, and that it holds for any length of time. Okay, now we've got to do one more thing. I want to cover the. I've got one other commodity that I want to mention here, because it's related. The copper market. I wanted to get into the copper market a little bit, because that's been a big influence on production and consumption and everything. And as we talked about yesterday, the copper market has been acting very, very poorly. It's had very little support on the downside, and has lower tops all along, and so it's interesting that it's still going down today, and so it really makes an interesting spot here for the market, because we are still down, and we're breaking down. We're at 335, and once we go below 329 in the copper, we are going to have some real serious problems, in my opinion. Okay. All right, we'll take a little break here to pay a few more bills, and we'll be back to wrap things up. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we have a caller from South Carolina. Robert, are you there?
Yes, sir. How you doing, Larry?
I'm good, sir. How are you today?
I'm doing pretty good. I keep waiting for this S&P to hit that 1415 so it'll sell off, but they're not allowing it to do much, huh?
Well, you just be patient. You got another couple hours of trading. It might make it yet.
Oh, yeah. And I think you're talking about peanut butter and banana sandwiches.
You're getting close, my friend. You're getting close. You win the prize.
Years ago?
Yeah, you got it. It's the death of Elvis Presley tomorrow. I have to tell the story about it tomorrow. But drop me an email with your address, and I'll send you a really nice book. But it is peanut butter and fried. It was actually fried peanut butter and banana sandwiches was Elvis's favorite meal, and I'm a big fan of the King, and so I thought I'd bring. I have a great story to tell, a family story about that tomorrow, but we'll save that. You had a question about the S&Ps?
Yeah, I can't wait to hear your story. I'm just waiting on it to play out. I mean, we got Venus conjunct Saturn today, which is supposed to kind of ground things out, so hopefully it worked out for us.
What I did, Robert, is if you'll go into Tiger TV, what I did as a request for somebody is I inverted the Bradley model. In other words, I flipped it upside down to give a mirror image of what it is doing, and you'll see that, we're over a Bradley date right now, and if that's the case, we should be down, into the 24th. Now, in real life, I don't flip the Bradley model back and forth. I let it play out. But when it's at shorter-term times like it is now, where we have these three major cycles that are hitting today, tomorrow, and then we've got the new moon on Friday, I will take a look at it because the market's doing nothing. I'm just trying to determine why. Frankly, I'm guessing as to why it might be doing it. I mean, usually I have a pretty good idea, but frankly, with this low volume and the fact that there's so much divergence out there, I'm as confused as anyone, and I certainly agree with Basil that it's a really tricky time right here because, I could totally be wrong and, everything is going to go, rocketing to the moon for some reason.
Yeah, I'm either way, I'm watching it.
Yeah. Well, I think the whole world is. The problem is there's not as many people watching it as before because the volume is not just in the U.S., it's every exchange. It's Hong Kong, it's China, UK, France, England, Italy, all of them. All of the volume is down in all of these particular indices and exchanges.
Well, Larry, if you took out the high-frequency trading, it would be even worse.
I think you're right, because high-frequency trading in some of these places is quite good. Now, I would like to ask all of our subscribers here at TFNN if they would send a donation into Goldman Sachs, because they announced today that they had a very large stake in Knight Capital that they put on right before it went into the sewer. So we want to help our friends at Goldman Sachs. Hey, thanks for calling in, Robert. Yes. And may God bless. Everybody have a wonderful day. Say a prayer for Basil's friend that's being sent to the high heavens today, and may God bless.